All right, well, to quote the song, we've got a long way to go and a short time to get there. So let's get right to it and start with the biggest of the Big Apple. No, we're not talking about New York City, all due respect, Frank. We're talking about the world's biggest company. Getting even bigger today, Apple shares rallying more than 5%. Apple's move, adding nearly $104 billion to its market cap. That's equal to, get this, an entire Citigroup, 2 Kraft Heinz, and roughly 3 Chipotles. So Tim Seymour, obviously our production staff is hungry, but do you want to be a part of it? Or are these little town blues headed Apple's way?
Well, that's the question, I think, is it starts spreading the news. Are you leaving today? Or if you don't own the stock, are you buying it today? And after what is almost feels like a punctuated move on what has been an extraordinary run just since earnings, north of essentially 40%. Everyone's done the numbers on where they are off the lows, and it's been staggering. The question you have to ask yourself is, what's the multiple you put on the services business, and what's the multiple you put on a hardware business that actually looks like there may be some gross margin growth in that? 350 million of those 950 million rough phones probably will be refreshed and renewed in this 5G cycle. But a $60 billion services company, if you put a 15 times multiple on it, which is significantly lower than what most of the street does in a blended multiple, that's a $1 trillion company on its own. This move in Apple is nothing short of extraordinary. And frankly, no, I can't say you should go run in and buy it today. I think there's a lot of folks that wonder who missed this move. When is my spot? And I'm not sure it's tomorrow.
Karen, the stock is more than doubled in a year, up 133%. It's like the pandemic never happened. Are there revenue odds up 103%? Is there net income odds up 103%? Is there free cash flow going to rise 103%? Do we care?
I guess apparently not. I think we could have played Fly Me to the Moon as well. I own Apple. I actually hate when it is up on something like this because it's not really, there's no reason to it. I don't know why. For me, the stock split is really not a reason. But then I keep coming back to, I don't have an alternative, and I don't want to own cash because I'm afraid of inflation. So I don't want to own cash. So I know that I'm not going to be able to time it on the way out, time it to get back in, and make enough of a spread there to pay for the taxes that I'll have to pay when I sell it. So I'm sort of holding it, but I hate action like this. And so if I want to hang on to it, then I got to look, where do I hedge? And that brings me back to S&P puts. The volatility index has come in. I have puts actually expiring today worthless, as many of my puts have. But if I'm going to hang on to these things because I don't have an alternative for them, I need a little protection.
Yeah, and shame on Kevin and Bree and the production staff missing that Fly Me to the Moon, really just letting us down. Steve Grasso, it's clear that fundamentals, I'm not going to say don't matter, but they've kind of been left in the dust. Apple is a top 15 holding in 234 major ETFs, according to ETF database. As long as macro money keeps coming into the market, just throwing your money into an ETF, whatever it might be, could Apple just keep going to the moon?
Yes, it could. And I broke my own rule on this one. Apple is something that you own, you don't trade it. I actually tried to be too cute. I sold Apple right before earnings. I wound up getting it right in the mush now. And I think the most part of this, Brian, is the split. It adds no intrinsic value, as Karen has said, as we've all has said. But it's always positive when you have a right way split in a stock. And when you look at past performance, it's done the same thing. Ran up into the split. It'll back up a little bit a couple of days after the record date. And then after that, it runs right back up. So you're left sort of holding the bag here. I bought it for services. Didn't believe it was just a one-trick pony with hardware. So I would say if you've waited and you waited this long, you might see a little brief pullback next week. And I think this is why value can't get going. 2 issues, Tesla split, Apple split. Let's see where the dust settles and where we are in 2 weeks.
Yeah, let's not forget, BK, that Epic Games, the maker of Fortnite, a massive company, filing a lawsuit basically going after the Apple App Store. I understand the services business. The revenue of services is bigger than Facebook's entire revenue altogether. I get it. This is also a company that's under a little bit of, judicial threat, if you will. There's a headline risk here. Why doesn't anybody seem to care?
Because they love their Apple phone. They think it's the greatest thing ever, and they're taking a page out of Peter Lynch's book, Buy What You Know and Buy What You Own and What You Use. And again, I go back to the split, which everybody's talked about. It's completely absurd. But you know what? Until proven otherwise, it's hard. Certainly would not short Apple here. But there's a couple things that I do know. We know that we have that headline risk. We know that we have the potential issue with Chinese demand. We don't know how that's going to play out as we come into the election. And the last thing I know, Sully, is that trees don't grow to the sky. So eventually, this will come back down to earth. It's not a time to short it, but if you're long and you're a trader, there's nothing wrong with taking off a third. And as it goes higher, just keep taking off a little bit here and there. Yeah. The trajectory of this thing is straight up. I have never seen a stock chart that continues to go straight up. Eventually, they come back down. So be careful on Monday morning if you're thinking, hey, I'm going to buy into this thing because the momentum's there.